Good afternoon, everybody. Andy Pedraza here with Special Effects Academy on the start of the week session for September 9th, 2018. And we'll get right started. We will have our regular agenda. We'll take a look at the prior week, our currency strength meter comparison, the fundamental announcements for the week coming up, major pair analysis, setups in progress, and a few parting words. Starting off with the week that just ended, these are the trades that you can see on your screen for the week on the short-term account. We had actually quite a few trades this week, 30 trades. I'm sorry. Let me start that over. This is the long-term ledger. There has been no change from the week prior. We have the euro-pound trade still open. That was initiated on the 30th of August, and that one is still open to date. Nothing else has been opened or closed. Moving on to the short-term ledger, apologies for the confusion there momentarily. The short-term ledger for the week, we had 24 trades that were opened. 9 of them were winners, 15 were losers. So we did have a negative week at minus 4.27%. So not a terribly large loss. I actually consider anything under 5% to be essentially flat. There was a negative weighted pip profit of 76.2 pips negative. So that was the loss for the week. So that is pretty much it. The week had a bit of a swing in both directions by most of the pairs. We had a couple of fundamentals. The fundamentals really didn't do much. The only noteworthy thing that happened during the week was the pound did strengthen first on the back of what essentially were fake news. There was a release of a supposed agreement between Germany and Britain on Brexit. That never actually happened, but it did go out as, call it gossip, rumor, whatever you will. And it caused the pound to strengthen. Later on in the week, a little bit of positive news, real news actually came out and gave it another bit of a boost. So the pound had one of the better weeks it's had in quite a while. But again, you see the results. A lot of the trades went against us. We did have some winners. Some of them were really good winners. So the week wasn't as negative as it could have been, but essentially a down week by 4.27%. Notes and opportunities for improvement, not a whole lot. As I mentioned, we did have the market swinging in both directions throughout the week. Those are tough conditions to trade even under normal circumstances. We had a few fundamentals as well adding to the mix, as well as that news that came out for the Brits. We did follow our plan and our system. We took the trades that were presented. We managed them properly. That's why the week wasn't dismal, simply a regular negative week well within our parameters. Due to the market conditions, of course, we won some, we lost some, and essentially a very small loser of a week. We did not keep any trades open over the weekend on the short-term account. Moving on to our relative strength meter for the past couple of weeks. On the right-hand side of your screen, you will be seeing the week that just ended, the week that ended on September 7th. We can see that volatility, the amount of movement that the pairs made is a bit lower than the week immediately prior. So we had a net change in either direction of 2.5%, give or take a few tenths, whereas the prior week was above 3%, almost at the 350. So we did have a little bit less volatility. And again, perfectly explainable if we remember what I said, that the market was swinging in both directions. We had the Aussie have a pretty bad week. It lost ground against every other currency out there. The CAD was sort of middle of the pack, won some, lost some. The Swiss gained more than it lost, except against the pound and the JPY. The euro was also a little bit middle of the pack towards the bottom, lost ground against everybody except the Kiwi and the Aussie. The pound was the clear winner, as I mentioned, due to the news that came out regarding Brexit, fake and real. It still boosted the pound to levels it hadn't seen in quite a while. JPY was also a good currency, to have traded. It did get a lot of appreciation, and we did indeed make quite a number of pips out of the yen. It gained ground against everybody except the pound for the week. The Kiwi was very much at the bottom. It only gained against the Aussie. It lost against everybody else. And the US dollar, it did gain ground against everybody except the pound and the JPY. Silver had a dismal week again, and quite a deep loser of a week. So we have the bullion market is not doing well right now. Silver went down. Gold, however, made out well against a few currencies, lost out against the others. So also essentially middle of the pack. Moving on to our fundamental announcements. This is going to be a very heavy week. So we have interest rate decisions coming out of the Swiss, out of the Brits, and out of the Eurozone. So we have that to look forward to. Going to be a very heavy week. We have the GDP month over month coming out of England early morning tomorrow. Not going to be trading that one live. We also have average earnings coming out of the Bank of England as well on Tuesday morning, September 11th. Also will not be trading that one live. Employment numbers out of Australia, another one I'll give a pass on. That economy is small enough that the employment really doesn't tend to shift the needle a whole lot. And then on Thursday, things get interesting. We have the Swiss interest rate decision coming out at 3:30 in the morning, my time, Eastern Daylight Time. That will be traded live. So Thursday morning, that would be Wednesday night into Thursday morning, we will be opening up the trading room around 3 a.m. Eastern Daylight Time, 12 midnight Pacific Time. If you can join us, you're welcome to. If you can't, we fully understand that may not be the most convenient hour. Then we have the Bank of England interest rate decision that same morning, 7 a.m. I will be trading that one live as well. So no sleep for Andy on Wednesday night into Thursday morning. It's going to be a rough evening or morning for me, however you want to look at it. So we will not be having a noon session on Thursday because I will be completely wiped out after trading those two back to back. And that is it for Thursday. Let me go to the next screen. And actually, that is not it for Thursday. Thursday, we also have the European interest rate decision. So it's a triple whammy. We've got the Swiss, the Bank of England, and the Eurozone, all of them giving interest rate decisions anywhere between 3:30 a.m. my time to 8 p.m. my time. So those will all be traded live. And again, do not expect to see me until the evening session that day. I'm going to be catching up on sleep. But I will send out the schedule for those fundamental announcements. So Thursday is the day. You can pretty much ignore all the other days for the week. On Friday, we have our retail sales out of the U.S. That may move the needle, may not. It's still Friday. But I will not be trading that one live. But it is on the calendar, so be aware of it. So that's going to be it for the fundamental announcements for the week. And with that, we move on to our major pairs. So looking at the daily charts, which is what we do in our weekly review, start of the week review, the euro seems to be poised at a significant level of support. It has breached it before, only to quickly return there. It is not only at support at the bottom, but it's also at resistance at the top. You can see that we have pretty much a sideways channel going on it has been bouncing across quite steadily. But not only that, the Ichimoku cloud has also been dropping and is now serving as current resistance above the price where it's at right now, which is down here. We do expect that probably to do another try at the bottom of the chart. However, if it does break through the level of resistance, we could easily see a trip towards a much higher level. So there's nothing that we can do right now except just keep an eye on it. I would be expecting a move in either direction. The key thing is knowing in which one it's going to happen. Of course, we're not going to know, so we'll wait for a proper entry signal and trade it accordingly. For now, it's at that no man's land, that limbo, where you really don't know what could be happening. Moving on to the pound dollar, we see a little bit of the same, not as apparent as with the euro, but it is right below a significant area of resistance, and it does have some support below where it's at right now, so it's trading around the middle of that. Personally, I think the pound is still going to weaken significantly before all is said and done regarding Brexit, so I'm going to be very happily trading this one down as often as I get good signals. That's going to be my bias. However, if I do see it breaking through resistance and heading to the top, I'll admit I was wrong just as happily and trade it up for however many pips we can get. So another one to keep a close eye on, but nothing happening right now. And especially with the interest rate decision coming out on Thursday, the pound may indeed take a little bit of a breather before it starts moving, either close to the fundamental or immediately after, depending on what the result was. They did have an interest rate hike last month, so they're coming off of that. Very doubtful that they're going to change it again. But if they do make a surprise change, that is certainly going to galvanize the market. So we'll be paying close attention to that. Moving on to our USDJPY, we can see the sideways movement on the daily. It is range bound with a few wide swings along the way. It's riding right inside the area of support and resistance indicated by the shaded area. With the USDJPY, I'm also bearish. I think it's overdue for a trip towards the bottom, but it has not been cooperating. It's been going up, up, up. Finally broke that upward movement, but really hasn't wanted to break towards the bottom yet. Another one to keep an eye open for, but until it gives us a good signal, it's a very dodgy trade. USD CAD, we had the Canadian fundamental last week, their interest rate decision. We can see that it is very sideways with some bearish bias, but that broke last week, and the prior couple of weeks have been very bad for the CAD. It's definitely lost ground against the dollar. This is another pair I expect to give us a trip towards the bottom. Either the prior levels of support at the 129.15, the 126.25, or all the way to the bottom at the 122.50. I don't care which one it aims at. Those will all be good trades regardless of where it ends up stopping. But again, have to be careful to grab the right entries and not jump in ahead of time. It's much better to jump in late than to jump in early with the Forex market. Jumping in late, you can still make quite a significant amount of pips. Jumping in early is why people lose their accounts. Moving on to USD Swiss, we traded this one for a nice chunk of profit on the long-term account. We got out on the retrace. It has since dropped lower, but then retraced again. It's being very, very indecisive where it is right now. So I'm waiting for another break towards the bottom to continue trading that. For now, it's a waiting game. On the positive side, it did break through the support indicated by the shaded area, decisively broke down. We took the bulk of those pips, more than half of them. So that was a good trade. And now at this point, we're waiting for either a continuation or a full-blown reversal. Moving on to our Aussie dollar. The Aussie dollar has only one direction down, but it does take very wild swings, which is why I've been trading it very cautiously when I do. You do not want to short this and then end up with a reversal of 300 pips, only to then have it prove you right after you've already eaten that loss. So I haven't been trading it long term for that reason. I will, however, continue trading it in the short term on any of the swings in either direction, depending what the general bias is at the time. Same thing with the Kiwi dollar. In fact, it looks like a carbon copy of the Aussie dollar chart, and the same caveats apply. If I see a good short-term trade, I will take it, but a long-term is just a little bit too risky, for my taste at any rate. Aussie CAD, we had the CAD losing ground on the USD CAD, as we saw. With the Aussie CAD, quite the opposite. The Canadian has been gaining on the Australian quite consistently. It does do some very wild swings, which can easily take you out, even if you're right and the general direction is downward. Trading this one, you would have to have very, very wide stops. It still seems to have a lot of room to go down, but again, not for the weak of heart, faint of heart, whatever the saying is. And we've also managed to grab some pips here and there on the micro trends within the greater trend. Always trading in the direction of the trend, trying to catch the turnaround. So that's worked out more often than not. Euro Swiss, this is a pair that we've traded in the past quite successfully. It looks like the Swiss is strengthening majorly against not just the dollar, but also the euro. We do have interest rate decisions coming out of both of them on the same day this week. So it will be a little bit of a tough pair to trade. But again, if I see short-term entries, I will take them. Euro pound, this is our one open trade on the long-term account. You see that it did come perilously close to my stop loss, right inside the shaded area, bounce back, currently trying to make its way back up. We are trading it up, of course, and we're looking for it to go back to the prior high. That would be quite a chunk of profit. If it does take us out, again, some of my trades will end up being losers. That's just the nature of trading. But I don't think this one is ready to give up the ghost yet. I do expect the pound to continue weakening. And since we do have interest rate decisions out of both of them, I may reassess this trade on Thursday before either one of them gives their interest rate decisions. But we'll play that by ear later on in the week, depending on what it is doing. So keep an eye out for that one. EURJPY, very slowly moving bearish. So the yen has been gaining on the euro. But this is another one where you can see that even though the direction is sloping down, we have these really, really wide swings that do 500 pips at a time. You don't want to be on the wrong end of one of those. So trading this one long term is a little bit of a dodgy proposition unless you catch it on the turnaround on the daily. Catching it at one of these tops would be nice. And it's something indeed we may do on the next swing since it has been very consistent, but again, very cautiously. Euro Canadian, same caveats. The Canadian has been gaining on the euro significantly with wild swings, but nonetheless heading towards the bottom of the chart. It's really, really near one of those tops right now. So we're 3 days into a turnaround. This indeed may be one that we trade early on in the week, looking for a little bit of gain. The European interest rate decision is a factor there, so we'll play that one by ear. But in this case, I am firmly bearish. Price action on the daily has hit the resistance indicated by the shaded area and bounced back down. So we have a failed cross of resistance, and it's now heading back in a downward direction. I'm more convinced of strength in the CAD than strength in the euro at this point in time. which will also factor in that this one should be heading down. But again, safety first. I'll look for the right entry, and if I see it, I will be letting you guys know. Pound JPY, same caveat. Since the Euro JPY, the direction is downward. The pound is weak. The yen has been getting stronger, but really wild swings when it does a correction. So again, if we can catch it at the right point in time, we will. But we, well, actually, we did a few weeks back. We caught a nice chunk of one of those moves. So again, anytime we can do that, we will. But we're certainly not going to jump in too early on one of these. And if we do miss the turnaround, we'll simply wait for the next one. AUDJPY, more of a sideways chart than all the other JPY pairs. It was trapped in a sideways channel for the longest time, since back in mid-February, when it first crossed this dashed line here at the top. It has since consistently bounced between the two, and only recently, in the last couple of weeks, did it do a breakout towards the bottom. So we're looking at most likely a retracement at some point to do a test of the bottom, maybe even a test of the trend line. We have a junction right here. So we'll see how that plays out. Still very bullish on the yen itself, so I think this chart will continue going down. But indeed, we may see a retrace before that plays out. So another one that we have taken quite a lot of pips out of in the past few months, and we'll probably continue doing that, but we have to do it in as safe a manner as possible. Euro New Zealand finally broke out of the sideways channel it was trapped in. It did hit a new top, which you can see here on the chart, and it has then gone sideways for the better part of last week. So we'll take a look at what it does on the open, which already happened for the first 24 hours of the open, I should say. The first hours really mean nothing. And again, let's not forget the Euro interest rate decision funding this week. And I think this is our last one, the pound Canadian. Again, as with the Canadian, we can see that Canadian strength coming into play, as well as the pound weakness. This is a chart where they've just dovetailed. And another chart that we've taken a nice chunk of pips out of. It is currently in a retrace back towards the level of resistance indicated by the shaded area. We lost a chunk of pips as well last week trying to trade this one down. It didn't happen as quickly as we expected. In fact, it retraced on us and we got taken out. But I still believe this one will make another trip in the very near future towards the bottom of the chart to test the prior lows. So we'll be on the lookout for that one. What we lose one week, well, we would like to make it back the following week. So we'll see how that plays out. And that is the end of our charts. Before I continue, does anybody have any questions on any of the pairs that we've covered? I'll be happy to go back or answer anything. Okay, then that being said, I will continue. These are the setups I see in progress right now. So the dollar pairs, the dollar went back to strength, but it did have a bumpy ride. Again, last week was swinging in both directions. But it does look like we're going to be seeing dollar strength for another week or two, and it will be trading in that direction as much as possible, barring any upsets due to the interest rate decision fundamentals that are coming out of the European area this week. The euro, well, again, it had an interesting week. It did gain ground against a few, lost against others. These periods of uncertainty usually present before a move. So the euro is a currency that we need to keep a close eye out, open for. And again, stressing it once more, interest rate decision this week. Pound, it had a decent week. We covered that already. A few bits of news, one actually fake, helping to move it, and also interest rate decision this week. The Swiss move against the dollar did take a breather. It did do a retrace and then continued. We're keeping a close eye on it. It also strengthened against the euro, as I pointed out. And one of the rare interest rate decision announcements out of the Swiss is our third main fundamental for the week. And the CAD pairs, of course, we had the Canadian interest rate decision last week. No change. They left it alone. But nonetheless, the CAD both weakened and strengthened in different order against quite a number of currencies. So it was part of what drove the swing nature of the week, was the Canadian response to the fundamental. This week, being the post-fundy week, we're going to be looking at the CAD to see if it determines a direction. I am biased for the CAD getting stronger, especially against the pound. So we'll be looking at that early on in the week, because this might be low-hanging fruit where we can take a few hundred pips quite easily across a few pairs in anticipation of whatever happens with the fundamentals.
Can I ask you a question?
Always, Diane.
I'm a little confused because when you're going over the chart, the USD CAD, USD Swiss, and USD JPY, you mentioned that you thought that they were all three going to go down, from what I understood. But on this screen, you're saying that the dollar is back to strength, and I'm not really sure I understand that.
Well, it's all relative. That's why they're currency pairs. So you can have a strong dollar, but you can have the Swiss getting even stronger. And the euro, the Swiss, and the pound all have interest rate decisions this week. That may be the kicker. But if the US dollar wasn't getting as strong as it is getting, you would have seen these going down faster than they have been going down. So the USD Swiss in particular has been going down quite steadily. That is Swiss strength more than dollar weakness. The USD CAD was also doing quite a nice little run until, it failed. So I'm waiting for all of those to come back against the dollar. That doesn't mean the dollar has to be absolutely weak. It just needs to be relatively weak.
Oh, okay. Thanks.
No worries. Anything else, guys? Okay. Final words, just want to remind everybody that trading is indeed work. A lot of people, and luckily I don't think there's anybody here because by now we've disabused you of that notion if you came in with it. People get lured into trading by people telling them that trading is easy. It's not. Profits are not a piece of cake. Trading is work. You probably noticed that by now. It isn't the hardest work out there, though, and you could do a lot worse, but it's definitely work. You're going to need the education, the knowledge, the tools, working capital, and putting your shoulder into it. I've seen all of you do this in different ways. All of our paths are different. So this message really isn't for you guys. It's for everybody else that listens to us on YouTube after the fact. But a refresher never hurts. And the attitude towards the market in large part is going to determine your results. No shortcuts, no easy road. Put the work in, and you're going to have a lot of satisfaction after a job well done. And those are my parting words for the week, and a nice little picture of some islands or something. Hope you enjoyed it. And that is it, the end. Q&A. Anybody have anything else at all? Okay, then thank you so much. I will see you tomorrow at the regular noon session. And before we get to Wednesday night, I will have clarified the schedule for those back-to-back fundies that we're going to have. They're going to be starting at around 3:30 a.m. for me and ending at around 8 a.m. That's going to be a really nice 5 hours worth of trading. And again, don't expect to see me after that for quite a number of hours. Thank you very much. I will talk to you guys tomorrow. Have a good one.